Wall Street mega buyer of DSCR loans has shut the doors. Now, in reality, they haven't shut the doors. They have simply stopped buying DSCR loans. We as real estate investors, we need to ask ourselves a couple of questions. We need to ask ourselves why. We need to ask ourselves, is this the start of something bigger? Is this a repeat of what happened after Silicon Valley Bank, First Republic, and others went kaput? Again, if you don't remember that time frame, there was about a 4-month window post Silicon Valley Bank, First Republic, where it was nearly impossible to get DSCR loans. Now, is it the same? We're not sure. But you as an investor, certainly if you require DSCR loans, you should at least ask yourself why and what does it mean? So folks, if you haven't seen it yet, Convoy Home Loans was great enough to come in my school community and really shared that bombshell about 20 minutes into the session about a large buyer of DSCR loans kind of saying they're full. Now, if you understand how Wall Street works, and I have verified this with some friends of mine, and it is possible that it is nothing more than they've exhausted their allocated funds and they are going to, finish the year and then reallocate in 2025. That is absolutely a possibility. However, as somebody who studies the complete picture, I suspect the story is different. I suspect the story is, and I actually shared this with Convoy and Stephen Dow from Velocity years ago, that what I saw going on in the DSCR world was, let's just call it aggressive lending. There were rosy assumptions and frankly, too much leverage. Now, again, you got to remember DSCR loans, most of them are 25% LTV. You could push it in some cases and get 80. These are not, 95, 97, 100% loans. So let's take that off the table. But in reality, as I think Convoy has shared with you and I for the last 6 months, DSCR loan, the rates were on par and in many occasions better than conventional. Now, in many cases, DSCR loans would come with a prepay, 1, 2, or 3, based on what kind of rate you were trying to get. But I think what's going on behind the scenes is we now have had enough time for DSCR loans to understand the quality. Now, I know going into this program, the providers expected a certain percentage of default. That's just how they operate, right? They're going to give 100 loans, and going in, they expect X amount to get bad or go bad. I suspect, given what I've seen across the board, that they may be having some indigestion because I think the loan book is performing worse than expected. The question is, how worse? Is it 10% worse? No big deal. Is it 50? That's a problem. Is it 100% worse? That is, go back to the drawing board. Our calculation for risk is off. And the reason these are important is because it'll tell you how soon and how expensive DSCR loans could be. If it's something where they're just, they're going as bad as expected or slightly worse, they probably come back in early 2025, maybe slightly adjust rates and prepays, but nothing meaningful. Probably not enough to really impact deals. However, if you start to get to 50%, 100% worse, we could see DSCR loans be 100 basis points, 125 basis points more expensive. You will undoubtedly see 20% LTVs go bye-bye. You will see 25% DSCR loans go bye-bye, and you will probably go to 30%. Now, DSCR loans, as was explained in the school session, the video is available. I thought it was so important that I made it public. So shout out Convoy, shout out our school community for letting me do that. So you can go watch it. They define a DSCR loans, but it's just simply said debt service coverage ratio. Basically, the money left over at the end of the month can pay the mortgage. The number has to be larger than 1, meaning the asset pays for itself. That's it in a very simpler world. Watch the video to get a much more detailed. But the reason this is important and an important conversation is, remember, I've told you for decades now that one of the ways to impact the housing market is if lenders get nervous. We've talked about this. There was a time when lenders were not nervous, lenders were scared. And what did lenders do when they were scared? They basically stopped lending. First and foremost, they went from unlimited loans to 10 loans to 4. Yes, folks, there was a time you could only get 4 investment loans. That was it. You were done. You couldn't get any more. Now, as was explained in the convoy session, the DSCR loans, you can get as many of those as you would like today. But hey, does something change next year if their loan book is bad? Also, if DSCR loans go away, it's going to be impactful because that'll be less liquidity, less options. DSCR loans are very popular with self-employed, balance sheet folks, not the W-2 folks. But again, there's a lot of small business owners who, let's say, have aggressive tax planning and they don't show much income on their taxes. And that makes it hard to get a loan. That's what DSCR loans come in. So again, I don't know what it means, but I'm going to be waiting with bated breath to see if this comes back in 2025, if it comes back with any modifications or changes, because if lenders are scared, and frankly, we don't know that yet, they could just be full, right? That's one option. They could be full or they could be scared. We're going to have to see, because it could be very impactful to the real estate market, especially fix and flip and things of that nature, or buying, distressed properties where conventional just doesn't play. Let's talk about the week ahead. There's a lot of very important economic data next week. We're going to basically find out how we are ending 2024, what is set up for 2025. And it starts off fast Monday. Monday, we're going to get 2 economic reports. One will be on services, which is roughly, 65 to 70% of our economy. The other will be manufacturing. Both of these numbers will be reported on a scale of 0 to 100. Above 50 is expansion and below 50 is contraction. So PMI services last month was 56.1, decent expansion. It is expected to get worse. It is expected to come in at 55.3. So still expanding, but not as robust as the previous month. How about manufacturing? Manufacturing in the United States, if you're not aware, has really been in a recession for the better part of 2.5 years. PMI manufacturing last was 49.7, is expected to slightly get worse at 49.6. On Tuesday, we will get retail sales and home builder confidence. Retail sales is expected to get slightly better. Last month, we saw growth of 0.4 month on month. This month, we are expected to go 0.6 month on month. Home builder confidence is actually expected to get slightly better. It was 46. It's now expected to go to 47. What about housing starts, right? Again, it's one thing to be confident, but what the heck are you doing with housing starts and housing permits? We get that data on Wednesday. In addition, we will have a Fed rate decision. We will have a press statement. And finally, Jerome Powell in front of a microphone, which will probably be the most important thing that happens next week. It's not the decision. It's not the statement. It's Powell taking 60 minutes of Q&A. Housing starts are expected to get slightly better from 1.31 million to 1.34. Building permits up ever so slightly from 1.42 to 1.43 million. Fed rate decision, folks, as of last week, I did not bother to check today. It was a 98% chance we're going to get that quarter point. Again, I think they will, but I think they shouldn't. Just want to get that on record. I think the press statement is going to be basically, hey, this is an insurance policy. We're watching the job market, yada, yada, yada. Really a nothing burger. But then Powell in front of a microphone. This is where things might get interesting. Is Powell going to be a dove? Is he going to attempt to be neutral? Or will we see Mr. Hawk? Will he basically say things like, this could be the last rate cut for a while. This could be, wait and see. Is Powell for the first time going to set up a pause, right? Is he going to realize what is going on with inflation? All of those things. So again, I think the most important thing you and I will be talking every week, or this week, will be Jerome Powell's in front of a microphone press conference. And really, what is he saying? So stay tuned for Thursday morning. We will go over that statement in detail Thursday morning live. On Thursday, we go live at 7 a.m. We still got 2 more days in the week. We got initial jobless claims. Remember, folks, jobless claims last week was the 3rd week in a row that were kind of up and to the right. And we're going to see what's happening. Last week was 242. That's a problem, right? That's an early sign of potential problems. But this week is forecast to go down. It is forecasted to return to kind of the baseline in the 220s. It's expected to go to 229. So again, I am not concerned 220 to 230. I start to get concerned at 240, 250, 260. And the ultimate concerning number is 3.25. 3.25 is the problem, but we will see it week to week together. We will also get existing home sales. They are expected to get slightly better from 3.96 to 4 million. And then finally, U.S. leading economic indicators are expected to get slightly better, but still negative. Last month, negative 0.4. This month, expected to be negative 0.1. And then finally, we get the final inflation print, PCE. Again, remember, just 2 days before, Wednesday, we're going to get likely a rate cut. What's going to happen with PCE on Friday? It's expected to go up. Inflation is expected to go up, PCE headline, from 2.3 to 2.5. PCE core is expected to go up from 2.8 to 2.9. I'm flummoxed on why they don't just keep this in their back pocket, use it in January, use it in February. Hey, that is just me. For those of you in my school community, I have an extra special treat for you. The one and only Dion from Dion Talk will be going live for a solo one-on-many Q&A. You can find it in the calendar. The Zoom link is already scheduled. It will be 5 p.m. Pacific this Thursday, December 19th. He is going to lead into this talking about the top 3 mistakes he has made more than once. Again, like all our sessions in school, it will start off with a theme, but if you are there, you will be able to ask Dion questions directly. You can also put questions in the comments, and I suspect this will be like lots of Dion's videos or Q&A, that he will go until the questions are finished. So if you are a part of our school community, you got an extra special treat this Thursday, 5 p.m. Pacific. Since we're talking about school, let's congratulate Donato, Denise, Bill, and Jeff. We did get 4 members of the amazing school community. 67 cents a day. I have no idea why you are not a part of our school community already. There is lots of new stuff happening every week. There is 350 amazing folks going in the same direction. There's all kinds of thousands of dollars in free education at level 2 and level 3. It is all there for you. Got some update from Lance Lambert from Resi Club. If you're not following Lance, you should be getting his free newsletter. Go to resiclubanalytics.com. Get your free newsletter. He talked about what landlords' biggest expense increases were in 2024. 37% of mom and pop landlords said the biggest increase was insurance. For me, insurance increase was 2023. I got hammered in 2023. Not so bad in 2024. Next was property taxes. A lot of landlords say the increase in property taxes was their largest impact. Thankfully, I am in California. I can't believe I just said that, but I did. Thankfully, I'm in California. And Prop 13 really keeps property taxes low. Number 3, 21% said maintenance. I think I'm going to agree with that. While 2023, my biggest increase was insurance, maintenance, repairs, everything is, 20, 30% more expensive. turning units more expensive, painting units more expensive, fences more expensive. Man, shoot, just getting a plumber to come out is more expensive. Man, crazy. Just to finish off the list so we get to 100, 13% said it was legal and compliant. And then finally, 6% of folks said it was utilities. Wow. Utilities were the most expensive. Let's not forget to tell you guys we are under 60 days away from our Vegas event. A lot of you are making plans to come. I suggest you buy your tickets soon, if not today. They are selling out fast. I have no ability to add extra tickets this year. So if you are coming, go to Eventbrite, one rental at a time, buy your tickets. You will be in for a treat. First timers, somebody who has zero, this is the kind of room you're going to want to be in with all kinds of go-givers there to help you. Couples, I have a special focus on couples this year. We're going to have multiple presentations and Q&As with couples. For those in the first 5 years, frankly, you have to be there. You've heard all of us talk about the first 5 years suck. You want to be in the room with folks that are going through it. You can share stories. You can get phone numbers. You can build friendships and build support communities. And again, if you're looking, if you're bigger than that, been in the game a while, come on out, share your experience, share your stories. You never know those one or two things that will make a difference in your life. We did get a couple of earnings on Friday, and we will wrap this up. RH, Restoration Hardware, again, expensive stuff. They met on earnings and in line with revenue, despite the worst housing market in 30 years. That's a quote from their CEO. Costco, once again, beat top line, but bottom line. Wasn't it Charlie Munger that said, Costco is the best company he's seen or something? I might be. It was a long time ago. Rest in peace, Charlie Munger. But I think he was a huge Costco fan. Again, I could be wrong. If I am, I apologize. Broadcom had a valuation of $1 trillion on Friday. They beat earnings and in line with revenue. And obviously, it's the AI growth and a huge beat that was important. And the last thing on Friday, I don't know if you saw this, but the 10-year note ripped, at least on rate. It is now over 4.4 after being at or below 4.3 for most of the week. Again, inflation fight not over. We'll just end with that, folks. You have an amazing day. This is the Daily Financial News. Like, subscribe, comment. Hope to see you in Vegas. And please join school. Later.